Welcome back to my final daily report market analysis video with me, Richard Perry, market analyst at Hantec, on Wednesday the 15th of January. Looking at gold, what we have seen in gold is this retracement, this Fibonacci levels of the retracement move on the big bull run that we saw between November and early Jan. 38.2% and 50%. That's sort of ballpark figure, I think, for bull market retracements, and it's interesting that we've seen the market sort of pulling back to 1536 and finding that, which is an old breakout support, that old September high, finding that as a basis of support within the two fib levels. We haven't still yet played out the entirety of this move. I don't think necessarily. I don't think you can necessarily trust the fact that there's not going to be another slight leg lower. However, it is interesting that the RSI is held up above 60. It is interesting that the MACD lines have come together and not bear crossed, and stochastics are starting to shallow off as well. So this market has picked up off yesterday's low, and those stochastics shallowing out certainly attribute that rebound off the low to close not a million miles off the high. And that certainly helps the stochastics to turn around, and that is obviously an encouraging sign from the bulls, whereby they buy into the weakness and pull higher into the close. And you've seen that in the last 24 hours the market has started to climb higher, little edging higher, of higher lows, higher highs, a little bit of a pivot at 1546 to take note of, little run of lows between Friday and Monday, and then became resistance yesterday, but breaking out has become supportive, so it's a little bit of a pivot there. 1563 is the real test of the bulls now. That needs to break out above that on a near-term basis. You'd also like to see, I think, the hourly RSI above 70, because that would suggest regaining momentum strength. Because essentially at the moment we're basically just seeing oscillation on the RSI and MACD lines, to be honest. But there's a stronger looking set of stochastics on the hourly as the market has started to pick up. But still, you've got the overhead resistance at 1563, which is really the near-term level that we need to look out for. That's the rebound high that we saw back last week, and if you break back above that, it really does suggest we're pulling away from 38.2% fib and then moving back towards 23.6 at 1572 area. So interesting rebound that we've got on gold, and I still think that on a medium-term basis gold is a buy into weakness, and trading back above 1557 could also be considered a sort of a positive development, being that old key September high that was a breakout point, but back above it, you'd say that that would be the bulls regaining the strength of that breakout. So interesting moves on gold at the moment. With that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars. Thank you very much, and I'll speak to you soon.